Welcome to Step 55, Income Stream 4, Capital Gains. So, income from capital gains is one of my favorite ways to make money. However, having time and money definitely makes this an easier venture. So as a recap, capital gains are the profits you make when you sell assets at a higher price than the original purchase price. We can see this in the case of real estate. For example, you bought your house at $200,000 and sold it at $300,000, resulting in a nice $100,000 capital gain. And we can also see this in other assets such as antiques, arts, and stocks, which hopefully appreciate over time, providing the seller with capital gains. So if you notice, there is some similarities between capital gains income and income from profit, but the major difference is that income from profit, income from your business, comes from products or services you produced, created, or offered, whereas a capital gain is not the result of your business, but rather involves an original investment that increased in value. So there's a couple more things we need to cover with capital gains. The first being capital losses. If you sell an asset for less than what you bought it for, this is known as capital losses. Unfortunately, this is not uncommon, especially during a market crash, or in the case that people sell a house for less than they bought it for. And this is because, generally speaking, assets do not appreciate or increase in value over time. A key factor needed for capital gains to develop is time. So it's not prudent for us to believe that every asset goes up over time, that even things like real estate are not a bulletproof investment. And even though there are years when the stock market goes up more than 10%, a good long-term average is 7 to 8%. Even with those notes of caution, it only takes roughly 10 years for your investments to double in value. So this is why financial advisors often try to impress upon younger people the power of time, especially related to compound interest. But remember, capital gains, while being an attractive way to make money, be that through property, stocks, or other assets, are never risk-free. You can't predict accurately how time will affect the value of your investments. For every person out there that made a lot of money on the stock market or the housing market, you'll definitely find someone who's experienced the opposite. We'll talk much more about capital gains and investments in part 8 of this course, so look forward to that, especially if you've not invested before.